Hello and welcome to this very special Commodity Champions that we are rolling out of Ceraweek in New Delhi, the India Energy Forum. Well, it is the second straight day of the seminar here, and it has actually the presence of major oil companies in India, international markets, the major oil merchants, banks, and of course the global oil producers and ministers as well. The PM also took a meeting today with all of these oil companies and oil producers, and one thing that the PM put forth in the meeting, one of course was the efficiency in case of the crude production, the supplies as a concern, and of course about relieving the payment terms to ensure that the rupee depreciation doesn't hit us as much. Anshu Sharma also is with me, who is covering the meeting, and she covered the PM event as well. And Anshu, tell us on what really were the key points and the reactions that the PM meeting had with all of these oil companies.
Well, on the sidelines of Ceraweek, Prime Minister met global oil companies' heads and made representation on the current oil and gas sector in India. Now, we understand that Prime Minister addressed the global giants which were present in the meeting with the Prime Minister, and some remarks were also taken from these global heads. Now, we understand that Prime Minister has said that consuming countries are facing many economic challenges due to rise in crude prices, and has sought cooperation of the oil producing countries to bridge the critical gap which is being seen in terms of pricing of petroleum products. Now, Prime Minister has appealed to oil producing countries to channel their investable surplus for developing nations like India. Remember, India is import dependent on crude products to over 83%. Now, he has also said that under exploration, developing countries should come forward and help India with technology and extension of coverage for higher acreage in India. He also sought a role of private participation in terms of investment in the gas sector. Now, remember, gas-based economy is something which India is eyeing at, and some Urja Ganga pipeline project is also happening. Now, these are the key highlights of the Prime Minister's meeting with the global giants. Back to you.
Thank you so much for that, Anshu. Well, those were the key point discussions that the PM had with all the oil stakeholders. But after the PM meeting, the Saudi oil minister Khalid Al-Falih said that Saudi Arabia actually went out of its way to ensure that the anxiety on the higher crude oil prices stayed at bare minimum. He also said that the Saudi Aramco is looking to continue to invest into India, and the sector that they're looking at really is the retail fuel space, and also in case of the storage possibilities.
Saudi Aramco's desire is also to invest in consumer-facing segments such as retail fuels and petrochemicals. We went out of our way to alleviate anxiety over supply shortfalls, and at the risk of accusations of reversing our production policy, we decided to increase production at last June's OPEC meeting to ensure there were indeed no supply shortages. This has averted a major price escalation.
Well, that was the Saudi oil minister marking some very, very important points in sense of investment and the crude oil prices. But while India and US, of course, might get into some kind of an agreement, an exemption from sanctions on Iran imports is something that really seems unlikely at this point, is the word coming in from Atul Arya, who is Senior VP Energy Division at IHS Markit. Atul also says that a lot of Indian companies already have put out orders on import of crude from Iran that is due coming in a couple of months. Let's listen in.
The big question is, will India get an exemption? Until now, the US has said no exemption to anybody. South Korea, another big importer, Japan, they're all coming to very close to zero.
So is the 4th November sanction going to be very sacrosanct, or do you see that date being worked about?
I think there will be, our view is that the US and India will come to some kind of an agreement, or at least have a long conversation to say, could there be a gradual implementation of those? I don't have any kind of inside knowledge to tell you, but we know that very senior officials have been here as recently as last week, this last couple of days, and given the value, the relationships the two countries have, we think there will be some kind of an arrangement.
So, Atul, just working with both the scenarios, there is no extension, no waiver on 4th of November. Where will India stand really?
Well, from what we understand, some of the Indian companies have already placed some orders for Iranian crude. So they will get some Iranian crude, and I think that was communicated earlier this week on Monday by some of the Indian companies. I think that India will have opportunity to buy oil from other places. The issue will be more expensive, and will it fit into the refining system?
We also spoke to Ravi Narayan Swamy of IHS Markit, who says they do not expect the crude oil prices to continue to go higher, and that is because the US supply will start to come in quite strong in the beginning of 2019. But he also says that the India demand will not go down anytime soon, and that would continue to kind of support the prices going forward. Let's listen into that conversation.
With the demand in India growing substantially at a higher pace than what the supply is growing, we expect the import dependency will probably reach around 90-odd%. So the import dependency is expected to continue.
US is yet another exporter which is eyeing Asian markets, which really has been Middle East's market for the very longest time. How do you see those dynamics changing?
No, I think if you look at any of the crude oil producers, whether it is US or Canadians, they know that the demand growth is all happening in Asia. So Asia
Everybody
is by default,
Asia
is the default market which everybody is looking at. We saw that the export from US has already started coming to India, and we do expect even in our forward view, we do expect exports from Canada also to come to India.
With what's happening in the global markets, what should India's strategy be?
The retail gasoline prices are also relatively high in India, even when crude oil prices were low. So it is not really that the demand elasticity is so strongly correlated to the crude oil prices.
Nowhere near.
Yeah, so from that perspective, we don't see that the Indian demand growth, there will be a significant impact on demand growth in India. And again, that is more of a short-term issue. Say mid of 2019, second half of 2019, we do expect output from US to increase by another 1.5 to 2 million barrels per day once the pipeline constraints are overcome. So with that, we do expect the crude oil prices starting to trend down somewhere in the second half of 2019.
We also spoke to Paul Mockwell, who says that it is about discipline, innovation, and bringing the cost down is what the oil markets need to look at right now. He also said that it really is about the conservatism as the key word that the global oil companies are looking at right now. The other words, of course, have been evolution, revolution, transition, and of course technology. Let's listen into that as well.
Oil prices are 50% up from where they were a year ago. And yet what we actually see in the industry, I'm talking globally, is still conservatism in terms of spending. I would say caution. The name of the game is really capital discipline. I think a lot of the industry are very careful not to repeat mistakes of the past, let's say leading up to the years leading up to when the oil price dropped. A lot of inefficiency crept in. So what we're seeing is a lot of focus in where companies choose to put their money, a lot of focus on innovation and getting the costs down permanently, and really just sort of gradual increase in spending. I think we would say that over the next 4 years or so, the upstream industry may spend on average about 7% extra per year.
How much do you see India really spending apart?
India is in the second quintile, if you could say. It's above half. It's between a third and a half. India's got a great history of exploitation. It's relatively mature in many of its basins. It also has a lot of new potential, a lot of great potential with the exploration rounds. But if you look at the mindset of the industry, not everybody wants new exploration acreage. A lot are more focused on near-term short cycle, so to speak, investments. A lot of retracted to North America. So really attracting investment is now a process of, I think, really laying out like a menu of opportunities from mature fields, small fields, and exploration.